Oh, I miss Maria.
Yes, that's where I'm at.
All right, guys. So today, we were talking and we decided to say that, hey, we're gonna have a quick discussion, um, about margin rates. And even though you may not have Tradestation, um, you can easily look this up on your trading platform. Um, and so mhm, margin is just basically borrow money, aka interest, kind of like a credit card. So let's do a quick review because if you have this information, you can know how much it's costing you, and um, um, having that information is very important. So, it says margin trading, and I just went to Tradestation, which is where we trade at, and I went to their website, did a search for margin rates, and up pops um, the results. It says margin trading allows you to leverage your assets to increase your buying power. Tradestation's competitive equities margin rates, interest rates as low as 6% if you have $1 billion in your account. I will add that. If you're a normal person, you don't get 6%. Make it easy to put the full buying power of your account to work. So, margin rates, um, less than 50K, 13.5%, 50K to 500K, um, 12.5%, 12.5%. I'm assuming most people would be in the less than 50K. You may be in the middle one, but it would be at the very, very low end, I would think. So now, um, it says for balance tiers over blah blah blah, call blah blah blah. All right, we don't have to worry about this tier right here, and we're gonna just focus on this tier where 99.999% of people are. And so the requirements for margin, um, position long star, uh, buy stock or ETF, short stock, sell stock or ETF, uh, day trading, margin, day trading. It says 25% value of the position. Uh, and then overnight, 50% value of the position, cash accounts. So let's read this. Margin accounts, day trading. This is number 3. Day trading requires that certain levels of equity be deposited and retained in day trading, accounting that these levels be sufficient to support the risk associated with day trading accounts. Da 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 da. Okay. Pattern trading based on rules any kind of posted for day trading. Pattern. Okay, this is the pattern day trader thing. Um, you know, margin trading. So day trading is 25% value of the position. Um, so it allows you to. It's basically 4 times. So you can do times 4. Yeah, this tells you just how much they'll let you day trade or whatever, what's your limit. So the only question I have is margin trading rates. Is this percent interest rate per day or per? I think this is a per day interest rate. Huh. Okay, line number one. Interest rates vary per the base rate and the size of the balance page. Be adjusted to trade 60%. So the same for that. Right. No. Margin cash. Day. To 8%. Default effective. I think this has to be per day. Day trading requirements. Non-day trade. Non-day trade. My execute the retrade. Pattern day traders. Special mod. You can lose more funds. Your broker fund. Disclosure statement. I believe it's per day because they don't have it as an annual rate here. I just want to see. You can lose more funds. Content. The firm can the firm can increase its house margin rate. Okay, so this is telling you all the stuff they can do to screw you. They force you to sell. Da, da, da. So I believe this is per day. So let's say you have. We'll start with a 50K account. Elisa, what is 50K times this 0.135? Are you there?
Sorry, I was on mute. So 50,000 times 0.135 is 6,750.
So that is very. So that would be ridiculous. So that can't be the rate. So now we have to break that down. So that is. So it has to be per year then. And so if we divide that by 12, what is that value by 12? What is the number?
Hold on. Uh, 562.
And if we divide that by 30, what's the number?
1875.
That's how much you're paying per night. If you're using 50, let's say you use 50K of their margin. Now, so now if and we have to assume that if you're using 25K, you can do the math on 25K. I'm assuming it's half that. But so you're paying 1825 or whatever you said if you're using 50K of their margin. So that means that every day, if you're using 50K of their money, you need to be making on average $18 or something just to break even. So it's just a point, guys, that if you have an account that's 50K, let's say your account is 50K, and they allow you to use 50 times 4, which is 200K, up to 200K. Basically, it's gonna be, you can use up to 200K to trade with. So that means they're allowing you to use 150K to trade with. So if you use all of that 150K, which you're only supposed to use half of it at night, but if you use it into the next day, you'll be charged 18 something times 3 because you're using 150K. Well, I guess then it will probably be the first 50K will be at the 13.5% rate, and then the other 100K, I'm assuming would be at the 12.5% rate. So I don't know. Yeah, this is the size of your account. So no, the whole account. Let's see. This is the margin rates for balance. If this is balanced, this 50K. So, um, yeah. So basically, I think it's the 13.5% rate because they're saying this is based on number one, interest rate based on the size of the account. Okay, balanced here, so balance less than this. It could be the size of the account, or it could be how much margin you're using. So I don't know. I don't know if the whole 150K you would be using. You have an account size of 50K. You can trade to up to 200K, and I don't know if all of that would be the 150 that you're using of their money would be at 13.5, or only 50 would be at 13.5, and the other 100 would be at 12.5. But I think it's almost a moot point because it's just 1 percentage point. And if you're arguing over that, you've already lost the game. So we'll just assume everything's all 13.5. So it's basically you're paying 18 point something something times 3 if you use all of the margin that you can, um, because it allows you to use, as long as you have what they say here, 25% value of the position. So if you have 50K, you can use during the day up to 3 times that amount. So that's up to 200K. And you have one interest rate. And then overnight, you can use 50% of that. So that's up to 100. You have to have 50% of the value. So that's up to 100K. And that's going to be your rate. So it's really crazy. But the point is this. If you hold something overnight, you're going to get charged. So this is why you better know what you're doing. And if you hold something for overnight, you're only going to be able to use basically double the amount, and you have to have 50% of the value. So, is that good enough as a lesson? I don't know if I went through that as best as I could.
I think it's good.
Uh, All right, guys.
Peace out.
That's all we're gonna do today. Goodbye. Miss Munoz, you can stay on.